For over a millennia, gold has remained to be a substance of value, providing that indeed it is a precious metal. There is so much that we can talk about gold. Nowadays, the bullion deservers sold coins, bars, and so much. This proves one thing, that investments in gold is becoming a top choice for many investors. Gold is a great defensive investment, and many people, when they understand the bear market is close, prefer gold than other defensive stocks. But even so, the question still remains. How does one get exposed to gold, and what are the best ways to invest in gold? There are a variety of methods through which one can gain the gold exposure. Some of the methods include actual buying and selling. This accounts for more than 50% of the exposure to gold. However, there are other methods through which you can be exposed to the trading of gold. For example, there are certain types of security that can give you access to gold trading. Even as you learn the art and science of getting into gold trading, it's important to mention that this is a subject that will require you to fully understand it in all dimensions. Also, with keen interest, it's a subject that has to be continually reviewed. This is for the simple reason that gold trading is different from other investment vehicles. Every one of the methods discussed below has its own risk. The degree of individual risk varies. No method, in particular, is risk-free. The only challenge with holding gold is choosing the method that will work best for you. Just to bring to your attention, there are several factors that you will consider when making your choice. This includes, but is not limited to, the accuracy the investment reflects the price of gold, risks, and security concerns. But how can we define best in terms of the methods by which we hold gold? The criteria should be simple. The method chosen has to include some certain element, security being the first. You should look for the safest method, or a method that has the least non-gold price risks. Also, when evaluating security, you need to look at things like solvency and the degree of theft. Second in the row is liquidity. You need to go with a method that allows you to invest and encash your gold at any instance. Finally, the method under consideration has to be efficient. Under this, you need to look for ways to hold gold with the least expenses. Perhaps you may be wondering why gold trading is not carried out using any other currency. To explain this, you need to understand that there is a foreign currency risk, just like in mutual funds. This comes about when the investor buys gold in another currency, particularly the sterling. Currency fluctuation is a common problem that affects most of the gold traders. Investors have now a good playing ground with a lot of opportunities. Options for investments have diversified. Between the years 2013 and 2014, the demand for this metal was virtually unchanged, standing at 1,074 tons. Currently, the metal price stands at $1,300. Many investors seek to hold gold as a store of value when market conditions become worse. Some would like to hold it as a hedge against inflation. However, it is important to mention that it can be cumbersome to hold large quantities of gold. Therefore, if you want to know your options in holding gold, here are some suggestions. The ultimate way to invest in gold is by gold mining stocks. There are many types of mining companies at public exposure. In the gold mining sector, there are exploration, development, and production companies of all sizes. But how do you know the company to invest in? Typically, the junior companies offer the best investment but has the most risk, and to add to that, they are the most volatile. The method holds one risk in particular: single stock investment. Like I said before, it also presents a unique opportunity where the investor could be exposed to a highly volatile sector. Usually, the upside is normally expected. One may double, triple, or even quadruple their investment when it comes to gold stocks. The gold stocks can have much leverage to the gold spot price. How do you choose the company you want to invest with? Well, picking one company from the many takes a huge leap of faith. The best performers usually are companies having a strong production base. In addition to that, the company must have proper reserves, big enough reserves. Lastly, when evaluating the company, they need to have a good management of the inventory supported by the production. How do you invest? Investors can own shares in a mining company. In addition to that, investors also may be exposed to things to do with management, exploration, or even production. This forms one way through which investors could play with gold in gold trading. Another way to invest in gold is exchange-traded funds, or ETFs. This will account for over 30% of investment in gold trading. Basically, most of the investors are familiar with the GLD, SPDR, Gold Trust, and such. What normally happens with the ETFs They allow one to have an investment in gold, but never to have the physical access. There are 33 ETFs that invest in gold. The GLD is the largest in the group, having the expense ratio of 4%. The items to be traded are bought and sold like stock. In essence, they are equivalent to the share of gold with the exclusion of the maintenance fees, management fees, and the insurance. Basically, a retail investor has limited chances of exchanging their GLD shares for bullion. This can only be done if there is a mandated authority to the creation and redemption of units and can only be done in 10,000-ounce increments. There are many benefits that come with the ETFs, which include ease of trade and high liquidity. They are also available in the standard brokerage accounts. On the downside of the ETFs, there is a constant speculation that the ETF doesn't have all the gold needed. Just like the stocks, they are very volatile, and in an event of a down run, the prices could evaporate very quickly. The largest gold fund SPDR gold shares have a total expense ratio of 0.4%. This will cost you around 1% in total brokers and market maker commission to buy and sell your shares. Gold coins is another popular investment that most investors are considering. Going with the record, this year alone, the U.S. Mint has sold 450,000 plus gold coins. This is under the American Eagle coins. This is far and away larger than the records from last year. If you are seriously considering this, then you need to purchase your investment through a chain of wholesalers or precious metal dealers. Therefore, these are some of the ways through which an investor can invest in gold trading. However, before deciding to take the leap, it is advisable that you first go through each one of them and understand better. If you think about gold coins, don't miss Jack Wicken's great article about the most popular gold bullions for investment. That's it for now. On our website you can find more posts as well as investment calculators and other financial tools. I hope you enjoyed it, and don't forget to subscribe to our podcast channel on YouTube. We would love to know the ways you're investing in gold, so feel free to share them in the comments below.